The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, Basil Chapman here, author of The Opening Call. It's my daily service, a very comprehensive look at the markets every single day. We have positions, long positions, short positions, long-term positions, short-term positions, shorts, longs, double shorts, etc. Right now we're mostly in the short position, having, at least for a week now, been wanting to look at shorting, and some of them are actually acting really well. That is, they're really poorly as a price action, really well for us as a short action. Now, what's really important about this particular phase at this particular time is that Big Friday, it's perfect. Why? Because this is the day we can spend a little more time on the intricacies of the Chapman wave. I have a lot of questions, sending emails back to people day and night. People send their questions. I'm thrilled that so many people are using the Chapman wave methodology. Remember, it's the umbrella for its title of all these different techniques that I developed. Almost all of them are proprietary, except one. It's just the numbers that I use on a particular index that has a fantastic success rate. Even today, there was a very strong spike. It was supposed to do that, and it did that. It gave the 7 points in the S&P. Well, now what we're looking at, and this is very important, is how come after a 550 or more point decline in just a couple of days, and being options Friday, perfect time to do it, how come the Dow isn't up 127 instead of up 27? How come the S&P isn't up 17 instead of 7.77? How come there isn't a give back of the loss or retracement to the upside under these conditions? Well, a lot of things to talk about today. I have a couple of really good questions as well. I would prefer to do right now, I want you to just take a moment. I'm going to run all the numbers so that you know exactly what I'm looking at. The ESU, remember I spoke about this the other day. I drew in the pattern. I said it's just going to be a little careful in case there isn't an upside spike above the high that was at 1648.75 the day of the Fed meeting. Why? Because if it held quite a few points above that, there was really be careful, because there is a pattern that says after the H pattern forms. Let me open this up. Spent a little time with TradeStation today to try to get these charts even clearer. Let me just see how that's working out. I just constantly want to keep updating and making these as clear as I can. Yeah, what we're looking at is that the E-minis made a low of 1577 yesterday, plunged in 2 days. That is a huge move in 2 days to go from 1649 down to as 1577. That's 50, that's 25, almost 75 points. I mean, that is huge. So now what we're looking at, there should be a bounce, at least an inside day. If the S&P E-minis breaks 1577, it says, based on the 120-minute chart, which made that peak F top at 1645, one of the reasons why in the Dow 30-minute chart, the Diamond's 30-minute chart, peak F, when I sent out my very unusual, rare update at 2:30 on the day of the Fed meeting Wednesday, why I said we're going right back into short positions and so forth. Of course, those have been very good. Now, one of the things that's happened, we've broken support at 1591.75. We've gone to 1577, had a bounce, had a retracement, making an H pattern. The low so far is 1578.25. Breaks 1577. That's not going to be very good. The MACD and stochastic are saying, geez, we're having such a tough time. The histogram, see the little red line goes to green over there? It's saying, I'm doing my best. I'm doing my best. This is really the story. Make it real easy. I don't know if it'll show up here on this particular. You know what? I'll go to this chart here, and I can also start reading numbers. See this chart that I give my subscribers to my opening call every single day? Look at that. This is the 120-minute chart. The 120-minute chart, unlike the Dow Diamonds had a different chart formation. They had a failure pattern at 15,340. Plunge also broke support at 14,844. And now what's going on is that they are pulling back as what? As the volatility index is at 19.95, holding really well. It should be down in the 1780 to 1830 by now. This being Friday, if there was going to be a huge move to the upside, because the volatility index went to PE. This is saying, hey, there is selling pressure going on. Most importantly, the Dow, if you look at this very simple chart right here of the daily, this is in the fifth quadrant, at 50,542 peak E, we are still in sell mode in the daily. By the end of the day, we'll almost certainly know about the weekly, and I have an absolute certainty that we're going to go to a sell signal. We might in 1 week in 1 day, in fact, go from a sell signal to a sell mode in the weekly charts, and that will say, be very careful. It's not telling you about the downside potential. It's telling you about lack of upside potential. And the S&P made a peak E at 1687 back on the 22nd of May. I believe it was the 22nd. Yep, 22nd of May. And look, we made that H to an M pattern. Beautiful. When you get to know these patterns, you remember the H to M when I was speaking about this way back in the GLD? I said, don't ever, ever, ever dismiss in the Chapman wave methodology a peak F top. Remember, we got that October of 2007 at the peak F top in the monthly chart of the Dow. Was that a pullback or was that a pullback? Look, the gold went from, the GLD went from 185.85 in September of 2011, made an H pattern with 148 as support. H becomes an M pattern. It's lethal if it slides deeply underneath that, and the very bar that takes it up, which is the Chapman wave Roman candle, does not go back above that, which it couldn't do. And that says you should get a 1-to-1 in the GLD, and that says that 185.85 to 148. Normally I take it to the next high of 174. Let me just quickly do that. It's 40 points. Let's call it 40. It's not really. It's less than 40. Let's call it 40 points. So from 174, that takes you to 134. Where have we gone? To 130. So look at that. That's at 1-to-1. But the 1-to-1 itself should eventually be from the 148 level. That distance should equal that distance. I'm not going to even talk about where it's going to, because gold, as far as I'm concerned, has still got time to go before it makes a pretty serious intermediate term rally mode potential. And I don't think it can do that for at least a little while, through much of the summer. Okay, so that actually covered the GLD. Let's go through the numbers. We've got callers online, and we'll be right there. So I'm going to go Indu. That's the Dow. Dow fading here. Not good action at all. The weekly chart, oh, look at that. I would love to say that the market's closed and the S&P right now has a peak D. I can put a down arrow in because the MACD is negative. Stochastic's down below 80%. I have to wait for 4 o'clock. Options expiration, anything can happen. But I can assure you that there is a really good likelihood that I'll be putting in a down arrow over the weekend, or at 4 o'clock today, and that 15,542 says 14,600 to 14,430 will be a time price move, and that could in fact take us into August, first week or so of August. That means the whole of July is just backing and filling with lower highs and lower lows if that happens. And a peak C will almost certainly be made in the monthly chart if it does decline and it goes below 14,600 by early next week. So, and the upside potential, rally potential, I'd say you've got 270 points to 310. You could just sneak over 15,000 again, make another H pattern. That's what I'm looking at. Now the SPX.X, that's the S&P. Also same sort of thing. Here, it's a little clearer because the stochastic's at 67%. I have to wait for the close, but I'm pretty sure I'm going to be putting a down arrow. Weekly chart saying we've already had 4 weeks of consolidation. There could be about an equal amount going into late July, early August. Let's go to the QQQ Trust. The QQQ is down to 70.23. I think there has been a slight difference in the charts that I'm showing right now. Let me just look at this. I want to show the monthly chart making a peak D. That is so informative to me. If there is no new high this month and there's a fairly high level consolidation, that's going to be really, really important. So I'll probably present something to my subscribers this coming week in great detail. I did in great detail today on the S&P, and we'll get to that in a moment. But the Qs are saying right now they are, in fact, I'm going to put a down arrow because the stochastics at 73%, but the deepness and steepness and quickness of this decline says it's going to take time to repair. 71.75 is strong resistance to 72.50, and on the downside I have a trend line target of 69, and that's going to be really important, 69.30. Let's just quickly went to the gold right now. Is the GLD is up 106. Where's my gold? If I can find it real quickly. I can't find it real quickly, so gold must be up a little bit. What I'll do now is I'm just going to go in silvers. SLV. I'm going to go to the SLV. The SLV is up 24 cents after gapping down. Wow, this is just, look at that. Look at that beautiful 9-period exponential moving average. I've had questions on whether I'm going to be doing a Master Trader series in the near future. I'm really thinking about it. I've just got a really busy schedule. I'm wanting to do it. I'd like to do it live, and I'd like to do it. I'm thinking of going to a place. I want to get out of town for a little bit. We've got all these wonderful folks out in Colorado, wonderful listeners, wonderful participants here at TFNN. Oh, Florida. I haven't been to Florida for a while. We'll see. Maybe just right here in Boston, but I'm thinking about it. The next thing is, we've got, now high-grade copper. Let me just quickly do this. I want to get to our callers real quickly. So high-grade copper is trying to find some kind of support here. If I go to high-grade copper in terms of the continuous contract, that continuous contract has broken the key. Did I say it once? The key channel support, which I can now get rid of. It's done. I don't need that anymore. When channel lines are finished, you just don't need them. The new channel line goes all the way from here, like that, as a parallel line. I've got a target of 2.56. I don't know if it's going to get there on the monthly chart because it's at 3.08. That is really far away. But if I can tell you right now that if copper breaks 2.91, it's going to go into the 2.8s real quickly. And the weekly chart has got the dreaded H. Next week's really important for copper. So let's just do a couple of things here. I want to look at the dollar, DXY, and then we're going to go to our callers, DXY. Look at that. Dollar's running nicely. Put into context, where is it and what is it doing? It's taking the lead because EUR-USD has made a top. In the weekly chart, it's a peak C, but the daily chart definitely has gone from sell signal to sell mode to peak F top, and I think I've covered just about everything I want to do. I've got 1.305 as the major support for the euro. It's trading at 1.31. Let's go to Mike in Ormond Beach, Florida. Hi, Mike. How are you?
Great, Basil. You kind of answered part of my question in your market overview, but I'm looking at the S&P on a longer term monthly basis, and I don't get to follow you every day, but I know you were saying that if we did not get a higher high in the monthly, in the month of June that was higher than the May highs, that would confirm that we made a peak C in the monthly.
Correct. That's exactly the point. Now, let's look at that. When we get back, we're going to have some look at the S&P, which is highly unusual. I'll be back with Mike.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. We're back. Basil Chapman, Tiger Technicians Hour, and we have a great question online. We have Mike in Ormond Beach, and he's asking about the S&P in the longer term. I have a chart here. This is not the chart that I sent out to subscribers this morning. That one was a really detailed one, actually with a black background. Why? Because the month hadn't finished, and that particular chart had particular patterns on it that I really thought were interesting. I'm just going to see something here, if I can do that. Let's see if I can get this up. There it is. I'm just going to swing this around. I'm going to see if it shows up here. You won't be able to see the writing. It's just way too tiny. But in this particular one, what it shows is the channels that are really important. And the channels, let me see if it's coming up here. Give me 1 second. In this particular instance, yeah, there it is. So all I want you to see is just a very clear up channel, down channel, up channel, down channel. Now we're in an up channel with a chance that I've given with the little dashed lines over there. There could be a down channel forming, and it has tremendous support in certain areas. And then I discuss a whole bunch of things here that are really important. What I want you to do in this one, and I'm going to move it away, is in this particular instance, it's even clearer. And I had a great question from one of our really astute traders, one of the best we've got anyway I've come across, and it's a question, it's a longer term question, and the question almost pertains to what you're talking about, Mike. And it said, the question was, There was a reference to Gann theory and all that. I'm not going to get into the Gann theory other than to say I had drawn this a long time ago, and what I've done is in this green area, I'm showing where there's been tremendous support since 1997 in the S&P monthly chart, S&P 500. I've also shown where there's been a huge range in the resistance area from 1557 back in the March high of 2000 to the October high of 1576, slightly higher, just 20 points. And then what's happened is we've gone from the 1576 area, we've gone to 1687. So that's 110 points. Let me just put that in, 1687 point, what is it, 1687.18. I've only typed it in about 10 times. 1680. Oh, I shouldn't have spoken. 1687.18. No, oh my goodness, I can never do that. Let me go through that again. I think I missed it. 1687.18. Correct. Okay. So what we've got here, and I got that in gray. Why? Because in gray it means it's not a major top. Now look at this. There's a peak C with, I don't want to say I'm 100% certain, but I would say that if I had to give an odds right now, I'm pretty certain that we won't make a new high. I don't see any catalyst whatsoever for making a new recovery high in June, which means that there's a good chance that this is peak C.
Right.
Now, here's your question really is there a chance that we could actually, this is actually the top, and we could break down? Or in my work, what is the history that would actually allow me to even mention the word leg D? And this is what I'm looking at here. Even if the stochastic starts to fail as it did, and this is the thing that I was so lucky that I have the Sears and Roebuck huge toolbox that allows me to have all these different tools, because I would have been faked out many times in that whole 2007 period after the after the July high of 1555. Why? Because the stochastic was failing. But the 9-period exponential moving average of the MACD, that's the differential, and the 9-period exponential moving average of the monthly chart in the S&P kept me in the position of saying I've got a short-term sell signal from the daily chart back in October. Then I said I've got a weekly sell signal, but the major monthly chart, I have to wait for the 9-period exponential moving average to break on a closing basis. And on the 31st of December, we got that break to the downside, and that was confirming that it would be a serious sell signal. Believe me, I wasn't thinking that it would go back to 666. No way. I was thinking it was a sell signal. The tide had changed. That was the main thing. So here's what I'm looking at. That 9-period moving average, as you can see, I'm pointing to my chart right now. Now I'm going to expand the chart because we've got everything out of the history so far that we need. I want to expand it so that folks looking at Tiger TV can see exactly what I'm looking at. The 9-period moving average is at 1530. Whoops, I hear the break coming on. I hope you got time to hold on. I'd like to talk a little bit about this.
Yes, I do. This is very interesting, Basil.
Yeah, it's not just interesting. It's important to both you and me because we want to know what's going to happen. So I'll be right back, folks. We've got Mike in Ormond Beach. We're looking at the S&P 500 monthly chart. What the heck is going on? And I'll be back, and we'll try to figure that one out.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right, everyone, we're back. Dow's down 47, S&P's down 9. Not good news here. Well, the day's young. We'll see what happens. We are on right now with Mike in Ormond Beach, and we are still looking at the S&P monthly chart, very long term. Now, the pink area that I'm showing, I'm going to just expand that a little bit so that we know what we're looking at, apples to apples. There, everybody's in that same area. We're just about to go back in because 1576.09 was the S&P's high back in October of 2007. And the S&P right now is at 1578. We're within 2 points or so of breaking that. That says that that's the magnet. Now the question becomes, is this really peak A, peak B, leg C? Or is there an alternate count that says it's EF or is it G/C? Well, in monthly charts, you can go back and look at not hundreds, I would say thousands, and you would hardly ever see in my work peak Gs. It happens, but it is extremely rare. So that's number one. Number two is, as long as the MACD, the moving average convergence, has a nice differential between the green line and the red line, to me that's a big positive. Third, the stochastic's at 92%. If it had to go back to 79%, that's 13 points down, what I'd be looking at is a move in the S&P below 1525, the 9-period exponential moving average, probably going to the bottom of this candle right here, which is at 1530 is the high and 1485 is the low. Now, I've done a lot of work in my channel work, and a lot of work in the repetition of patterns that why and how they've come about on that chart. There's no formula that says, yeah, there is a formula that says if certain things happen, you can certainly extrapolate from that data and say it should happen again. I would prefer to say that each chart, like each human being, has its own characteristic. You can say, human beings, but within the human being sectors, you've got all sorts of people. And that's the same thing with chart patterns. And we're just looking at a price point of the cumulative buy and sell, fixed price and sell points as it's represented in this case since 1994 on this particular chart. These are monthly closing prices, the highs and the lows. I'm using bars, I'm not using candlesticks. And in this particular instance, you can see that there is a beautiful channel that's going up here. And in the details, if I look at, I made a mistake. In the details, if I'm looking at it, what I'm saying is, it's not that I want. Let's get rid of that. Sorry, everybody. Get rid of that. There we go. In the details, what I'm looking at is what would constitute a peak. How high is it above the previous peaks? In this case, it's quite a bit higher, but I would have to say that if the S&P went at all to 1705 or 1710, I would say without a doubt it is leg C. But in the history of this chart, what I did is I did an analysis for subscribers, and I'll be doing a much more detailed one when the price closes at the end of June, to say that in every initial buy mode, and there usually are two, in this case there were three from 1994 to the high of 2000, mostly there are two, when you've got to peak C, although there could be a pullback, there was only one that had a sort of a time, 1, 2, 3, 4, 5, 6, 7, 8, 9, took almost a year in 2004 to come back to the previous high of the peak C. What I'm looking at is a situation that says almost every other time you've gone from a C to a D, and even then the D would go to an E. So when I'm assessing exactly what's happened here in this extended leg C, and almost all of them have had extended leg Cs, it's almost like the third wave of an Elliott wave, I have to conclude that in my work, this is leg C, probably going to go to peak C, and if that's the case, what we're looking at, the way we've come off right now, and I'd spoken about this a little while ago, I said I would not be surprised if that all of us who are looking for a pullback to buy kind of get scared because it's so quick and so sharp in the beginning, and a chunk of the sell-off occurs, then there's a rebound, and everyone thinks, good, it's time to go back in the water, and then another decline pulls back, and that's the decline you want to monitor for your entry points on the fantastic stocks that are out there still. And there are some great stocks looking really good in their monthlies, and weeklies are still very good. So now let me assess I give it a summation. What I'm looking at in the S&P is that there's a chance that we will come back to the 1520 to the 1515 area. At that point, it's going to be really critical because, yes, there could be another decline, but the most important thing that I'd be looking for is this area, if I can just expand a little bit here. In the weekly chart, now it's a white background chart. In the weekly chart, that whole breakout area of the 1500s, I think that is going to be key. So what am I looking for? I'm looking for lower highs and lower lows. And at a certain point, what's going to happen is you're going to get some basing, and then I'll look at my Dow Quartet, GE, IBM, MMM, UTX. I look at the NASDAQ Quartet or Quintet, and look at all those stocks, Google, etc. Almost all of them, to a chart, are making peaks in the, look at Google, in the weekly chart, this is peak E, and it's having a high-level consolidation so far. Peak D in the daily at 920.60. I believe that was the high. 1919. 920.60. Look at Priceline, BCLN. Priceline, also kind of a double top. So the best of the best are actually still acting pretty well, but they are showing signs that there's a real good chance that they want to pull back. Amazon, same thing, high-level consolidation. I think we're looking at the initial slump is 4%, maybe 5%, then a bounce, and then we will see how that support holds, and then we come back. But my overall impression, there's nothing yet to tell me that the monthly charts are breaking down or even showing signs of more than just a little inflection point to the downside at this stage. I have to remain longer term bullish. We're going to be very selectively bullish. Shorter term, I think the home builders need to digest gains. A lot's going on. So I hope that answers your question. And if you have a long-term portfolio of stocks, yeah, if you want to lighten up, there's no problem lightening up at all. You can always get back in. But my impression is that the Dow will be making higher highs over the coming months as soon as we get this digestive phase over. Hope that answers your question, Mike.
Yes, it did. That was pretty much it. You know, if you thought that we would still be able to get to a leg and a peak D in the monthly after we confirm our peak C.
Yes. Now, and here's the other thing. The difference between the dip at the top of peak C and the next leg that starts up to make that little trough at the top, not the bottom, the trough at the top that confirms the peak, if that's just a narrow little bit, in other words, if the high of June is not, how can I put this? If in July the high of June is taken out, and even if we don't take out the old high, that'll actually be a very big positive, because what happens is it says it's going straight to leg D. The only thing I want to say is D doesn't have to be more than 1 penny above the May high.
Right.
Because that starts leg D. I suspect if we go even 1 penny above the May high, we're going to get buyers coming in, people that have sat out and have missed the move, and that's going to be an extended and a screaming move to the upside. That's my thinking. Let's see where it stops on the downside before we get too carried away. Hope that answers your question.
Yep, thank you. Very good.
Thank you so much for calling. That was a really good question. Let's go to Frank in Lexington. Hi, Frank. How are you?
Pretty good. How you doing, Basil?
Very well, thank you.
Good. So, I've been listening, and your emphasis on the monthly charts is correct, of course, I suppose. But since all of this business is happening with the Fed and with the market coming down towards the end of the month, and months are really sort of arbitrary divisions of time within a year.
Absolutely, yes.
Does it make sense, really, to say the candle for June in any of these cases is going to be very definitive?
You know, that's a question I would love for you to ask that question of Dave White. He's our tech guru here. So that is a fantastic question. And, you know, I'm going to answer this question this way. Let's go to the Dow. Look at this chart. Excuse me, because the very first trading day of, here we are, in May, the week of the 24th, the high was 15,542.40. But you already started to decline on the 22nd, so that by the time you started the first week of June, the week of the 31st was already a lower low in the weekly. You come to June, what happens? You get, basically, it looks like you've gapped down, or not gapped down, but you've gapped off the top. So now you've got a peak. Let's just say that the 30, I can't remember how many days. Let's call it 31 days in May, if that's the correct. I can't remember offhand. Sure. Let's call it 31 days. What was this? This was 29, 30. Yep, they're 31 days. Let's just say on the 31st, the high was 50,000. Let's call it a round number, 15,000. And then starts the weekly chart of June. And it gaps down. Sunday night, the futures in the overseas markets are terrible. The next day, it gaps down. And your very first day of trading, in June is a gap down. What if the 31st was on Monday?
Yes, okay.
Or in the monthly chart, that was Monday, and then Tuesday there was a fractional high. What would happen? If there wasn't a high on that day, then you'd have to wait another week. Actually, you'd have to, if on the Monday, the 1st, there was 1 penny above, you wouldn't have that peak. So all I can say is historically I would, now I can actually say 500,000 charts at least. It's probably more than that I've done over the last 30 years from 1 minute charts to everything. I don't know, that's 500,000 charts. I would have to say that I posed this question at one point when I said, what are they going to do when they do 24-hour trading? When are you going to get your days? How does it work?
Right.
Well, then they'll arbitrarily have to make it on the hour at midnight, and at midnight's the change of the clock. So you see what I'm saying? It's an arbitrary. You got a fantastic point, but it's a point that I think Dave White would be just an absolute expert to answer. I'm not an expert. I can just say that historically, it's just worked that way, and that's how I would never have been able to get peaks and troughs if I didn't have the bar close at a certain point and start at the very next second later. So
yeah. I mean, it's sort of like a team is playing a game and they come into the fourth quarter. They have a terrible fourth quarter. It's just terrible. And clearly they're not going anywhere in the next game.
Actually, no, it's even worse than it's like I did the other day. We were playing doubles, and we went 6-6, and it was starting to get late. We said, okay, let's have, what do you call it? A face-off. What do you call those things again? I should know. I play the game.
What, tennis?
Yeah.
Or hockey, a face-off, yeah.
Well, it's like it's just, well, you're only going to play 7 points or 9 points or whatever it is. Oh man, somebody in the den will have to help. Tiebreaker. That's it. A tiebreaker. Okay. So I never remember these terms. I just play the game.
Right.
So the tiebreaker. So I always feel that's terrible because you play a whole set, and then what? A couple of points you're going to dictate. It's like the penalty shot in soccer.
Yeah, but I can look across the net and I can say Basil's legs are gone.
Yeah,
he's going to be ice cream for me in the next set.
That's right. So let's play a tiebreaker because that's it.
Yeah.
So it's the same thing. All I can say, that's the way we've done charting. It seems to work. It's worked. It's fantastic. I love it. For me, it's just my whole work is based on that. I don't know what I'd do without it. So. One day it's going to be a big problem, but right now it isn't. I'm going to say this is going to be a peak C, probably a peak C monthly, and that's the way we're going to look at it. So it's a wonderful question, but it's just a theoretical question. I can't even answer it.
Carry it on sometime to White.
Yeah, I ask Dave White. Maybe this after, maybe a little later in the day, if you're free and you ask him. That's a thing. I'd love to hear his answer. So thank you so much for the question.
You're welcome. Bye-bye.
Sorry about the lack of answer. So thank you, Frank in Lexington, Kentucky. Okay, now I had a couple of questions here. One question. I'm going to have to take a couple of days to do this. Bob in the Den asked me. I'll get the question again. In the Chapman wave. Where is the question? I'll get it right now. There we are. Let's see. A great question. I said it's a great question. What was the question? The question is, Basil, how far can the bottom of the axe blade fall into the handle before invalidated? Thanks. Okay. So, I'm going to try to answer that in the break. I'll try to find the answers to that question. And then we will look at the VIX.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, folks. I'm Steve Rhodes with TFNN.com, and the trend is your friend until it changes. A free special report is now available on the homepage of TFNN.com, and if you have money in the markets, this free report is a must. If your strategy is buy and hold, this report is a must. If you're a day trader, a swing trader, a Forex or options trader, or just getting into the markets, this report is a must. And it's the second best gift you'll ever receive. Look, if you buy a stock and the general market is trending in the other direction, you've reduced your odds of buying at the right time by 70%. Instead, let me teach you how to get that 70% Advantage Plus. The Plus is a free trial to my daily newsletter service, Mastering Probability. There's no upfront deposit, no charge to your credit card, and I compress decades of education into each daily newsletter. This is a limited time offer, so act now, and I'll teach you how to take the trend and turn it into your best friend. All the details are on the homepage of TFNN.com. Act now.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Folks, we're back. I'm going to go to the TLT. That was a question, then, a really important question. Let me show you something first of all. I think it was Verizon. What chart did I show a moment ago? BAAZO, Amazon. I had the chart. Maybe Boeing. I just wanted to answer a question here, and I thought I had the chart right in front of me, and I didn't have the chart. Let's see, what MA was it? Hertz. What am I looking at here? Actually, I was just trying to find. This is such a good example of the of what I was looking at. All right. Well, I'm going to show this right now. There was a peak D in the weekly chart of MasterCard. It went to 466.98, and then it pulled back. This is not the best kind of pattern. All right. I wanted to show the pattern that I call the falling axe. It does have it. The question is, how deep is the lower trend line? Can it go before it gets negated? And what I wanted to that chart I had just now was perfect, because I wanted to say that if you hold. Am I going to find that? Let's just see if it's this here. VIX. It won't be the VIX, no. No, I haven't been able to find. Oh, I'll find it over the weekend. But what I wanted to say is that trend line at the top, the one that goes from the lower highs, is the one that eventually comes back and becomes support, and that's really an important thing. The one at the bottom, when it gets too deep, you have to use other techniques, like left side, right side, price, time match, and everything. Where was that chart? Oh, I'll try to find it, and I'll look at it again. Now, let me just two things. The volatility index is at 20.84. If it closes here, if the weekly is in leg D above 20.04, the 200-period exponential moving average, it is giving us a strong hint that the monthly chart wants to extend, and because it's into the Roman candle, inverted Roman candle of December of 2012, it's a little more than halfway into the body. I have to anticipate there's a chance that 23.23 will be taken out. And if the VIX gets into the mid-20s anytime next week, and holds there, certainly into the close. It closes again above 20. If it closes today above 20, that's going to be really important, and that is selling pressure. Just make it simple. Now, the TLT is a wonderful question, because why? I've got a left side, right side price time match. Now, I've got an alternate wave count in the monthly, and I'm almost sure that I have to call that peak D. But here's the issue, that the TLT, which is the Lehman 20-year iShare Treasury Bond Fund, is making a left side, right side price time match to the 109.69 low of the 23rd of March of last year. That's the week of the 23rd, having gone to 132.21 and come back. It's taken a long time to come back, and I chose this a long time ago. Why? I chose this particular midpoint for this particular reason. It's the floating midpoint. It isn't exactly in the middle. Oh, I wanted to show a chart earlier on that was the exact middle. So now what we're looking at, this is, I'm calling it trough F. I would hate to think it's a brand new buy sell signal as, in the weekly as 17, 16, as leg A. So I think it's getting close to some kind of a bounce, and that bounce should occur somewhere between here and the most important low, the longer term support level is at 106.08. I think by next week we should see some kind of daily attempt to a bounce. And that bounce is great. What can you do? You'll fill the gap, go to 112 to 113. If it cannot do that, then bonds are saying, and here we go to the chart that I wanted to really show, that is leg B. I have to call it leg B in the weekly, and says bonds are going higher in the weekly chart from the low of 28.10, 2.8. We just doubled it from 2.8 to 2.5. Folks, my opening call, that's my daily service. We've had a really nice run with profits, especially now in the shorts. Check it out. Get 2 weeks free, intensive daily overview. I'll be back on Monday. Have a wonderful weekend, and thanks for being here. Stay tuned for Nico. Stay tuned for all the shows this afternoon.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing, and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.